Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at our VS or volume spike setup with a good example that's just unfolded on the Nifty, which is a market over there in India. But before we start, as usual, I need to go through our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and trading purposes only. Also remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, and more importantly accept, that losses can and will and do unfold. The trick is keeping those losses small and hopefully over time having profits that are larger than the losses. But losses will definitely unfold. That's a part of a professional trading career. All trade decisions your own sole responsibility. Right, let's have a look at a 3-minute chart of the Nifty. This is what's unfolded today, which is October the 5th. And as you can see, we had a couple of VS sell setups here. The main one I want to look at is this particular one here that nailed the high of the day. So I want to have a look at what the VS setup is, in particular why this was a better setup than this one later in the day here. I'm just going to use our trading mode and go back to just before this high here. What our VS setup is basically we look at a bar, if I look at the volume, that goes through a previous important psychological high or low. So if I put a high tag on this high here, which was the high of the day, the previous day, you can see. So this was a pretty important psychological high. So what we're looking for is a bar that goes through this high on increased volume. So let's go forward one bar. That did, but it didn't really on increased volume. The next bar then did again. But can you see how it opened just below the high, then went through it? In other words, it powered through the previous high level at 9954 on high volume. This is indicated by our red spike on our VS trend. Why is this, our VS volume bar here, why is this so important? Well, because if you're an amateur trader, a break to new highs, i.e. beyond an important psychological high like this one here, on high volume normally indicates the market is strong, and therefore you think that the market's going to keep on going to new high levels. So most amateur traders will be looking to buy this. But we have a good tool in MTPredictor that gives us areas of where professionals tend to reverse the market. In other words, areas of support or resistance. If I go back to this previous pivot high, right mouse click, place our decision point on, this is an area of support or resistance. Now this would have been on the chart in advance. You could have had this on the chart even before this bar even got there. In fact, you could have had it on the chart way even before today even opened. So why is this so important? Well, if I move forward one more bar, can you see how the next bar here failed to follow through? Can you see that? In other words, if the high volume on the previous bar was indeed buying, the market should have carried on up. So what is going on if the market fails to follow through in the anticipated direction? Well, what it means is that professionals are coming in and selling, in this case, on the previous bar. In other words, they're selling to the amateurs. They're getting short. They're ready for what could be a potential fake out. In other words, the amateurs get long, the professionals now want to get short, and they're now going to move the market in the opposite direction, normally quite quickly, catch the amateur traders out as they run to cover their positions, and that's what fuels the trade. So in other words, this is a classic fake out trade, and we have a setup here that takes advantage of this. You can see here we have our VS trade setup indicated on this red sell bar. So we right mouse click, do analysis. This then gives us a potential trade setup. Again, this is important because not only do you want to anticipate the market is going to fail or reverse or fake out at this particular level, but you need to have a trade set up in and around that has a large potential profit and also keeps your losses small. This is where we use correct position sizing. In this case, less than 2% of a sample 100,000 rupee account. This gives you the number of contracts to trade. So if this trade goes wrong, this would be a loss, but it'd be a 1R loss, a 1 risk unit loss. If it goes right, this is our target. If it goes right, then the target would be 7.8R or 7 7.8 or nearly 8 times greater than the loss. So this is the advantage we have at MTPredictor. Not only can we anticipate areas where fake outs will fail, but we can also have a trade set up in and around that that has a potential small loss to high profit ratio. In other words, the whole package. Let's move forward. You can see now you're entered short. Move forward, and as you can see, the market starts to drop very nicely indeed. Let's just turn training mode off and see what the end result is. It's just reloading the data. That's the end result. And as you can see, the market then declined pretty much for the rest of the day and just hit our profit target down here just before the close here. So in other words, we managed to catch the very bar of the high of the day and come out at pretty much the low of the day, but more importantly, the profit was 7.8R or 7.8 times the initial risk. And this is why this volume spike is so good, because it gets you on the side of the professional traders. So when it's right, you tend to get a big move. That's why the profit potentials are quite large. If you're wrong, you tend to come out quickly. Just as a PS, there was another VS setup here, but this VS setup was not quite as good as the previous one. Why? Because it's not failing at an important psychological high. You can see here the market was just chopping sideways with minor pivots, so this was not failing at an important psychological high. Can you see how if I zoom out, this high here, which was the high of the previous day, was a far more psychologically important high than these ones around here. So that's what we need to look for our VS setup, one that fails at an important psychological high or low. So a great example of our VS setup in action there today on a 3-minute chart of the Nifty. And as you can see, the result was an absolutely fantastic trade. I'll just take that off, where the market went up, made a high, which is pretty much the high of the day, gave us our sell setup there, declined for the rest of the day, came into our profit target, which was pretty much the low of the day, and that's where our potential profit of 7.8R would be available. If I look at our MTP trend, you can see that that was grey at that particular time, red stroke grey, so that would have been in the direction of that large degree downtrend as well. If you wanted to go to the 15-minute chart, you'll have also noticed that was at 15-minute resistance as well. I won't do that in this particular video. So a great example of our VS setup unfolding on a 3-minute chart of the Nifty today.